All right, let's dive into a financial world that is so ridiculously huge, it makes every stock market on Earth look tiny in comparison. We're talking about the foreign exchange market, or Forex. And trust me, it's a place with some serious power and some pretty surprising secrets. So let me kick things off with a question for you. If you had to guess the single biggest financial market in the world, what pops into your head? Maybe the New York Stock Exchange? The massive global bond market? Well, the real answer might just surprise you. And here's a little hint to go with that. We're talking about a market where trillions, yes, trillions with a T of dollars are traded every single day. But here's the kicker. It has no physical address. There's no trading floor, no opening bell, nothing. It's this financial beast that's kinda everywhere and nowhere all at once.
So that brings us to this first big idea, a market with no address. I mean, how is that even possible? How can something so enormous be completely, utterly decentralized? Let's break it down.
The whole secret is that Forex is what's called an over-the-counter or OTC market. It just means there's no central hub, no main exchange. Instead, you should picture it like a massive, global digital web. It connects all the banks, the big financial institutions, and individual traders, and they all just deal directly with each other 24 hours a day.
And this is where it gets really cool. See, unlike a stock exchange that has a building and fixed opening and closing times, the Forex market is like a non-stop global relay race. Just as trading is winding down in Tokyo, it's kicking into high gear in London, and then London passes the baton over to New York. It's the market that literally never sleeps.
Okay, so in this 24/7 global arena, who are the main players? Well, it turns out that a very small group of currencies absolutely dominate the scene. So let's meet the all-stars of the Forex world.
This chart shows you the power dynamic perfectly. Now, you might be looking at those numbers and thinking, wait a minute, that adds up to 200%. And you'd be totally right. And that's because every single Forex trade involves a pair of currencies. But the real story here, look at the US dollar. It is on one side of almost every trade.
Just let that number sink in for a second. 84.9%. That means that for every 10 trades happening anywhere on the planet, almost 9 of them involve the US dollar. It is, without a doubt, the undisputed king.
Which, leads us to the obvious question. Why? What is it that makes the US dollar the sun in the Forex solar system, with everything else just orbiting around it? Well, it's a powerful mix of economic muscle, history, and pure geopolitical clout. Let's start with another huge number, 62%. According to the IMF, that's the slice of all official foreign exchange reserves held by central banks worldwide that's in US dollars. So when countries around the world want to save money for a rainy day, they overwhelmingly choose to save it in dollars. And that trust is built on some really solid pillars. First off, the US is the world's largest economy, which gives the dollar a massive base. It's also the world's main reserve currency, which basically means it's the default for international business. And on top of that, its financial markets are the deepest and most liquid on the planet, making it super easy to move money in and out.
But it's not just about the economy. Geopolitics plays a massive role here too. For decades, the US has been seen as a politically stable country. And, it's backed by the world's most powerful military. All of that creates this sense of safety and reliability that other currencies just can't compete with.
So here's the bottom line, why this all matters. This dominance translates into real world power. Key commodities like oil, they're priced in dollars. About half of all international loans made in dollars. This means that even when two countries, say Japan and Saudi Arabia, are trading with each other, they often have to use US dollars to do it. The entire global economy runs on a constant supply of greenbacks.
Okay, so we've got this massive 24-hour dollar-centric market, but what is all this money actually for? What's the real engine driving these trillions of dollars in trades every single day? The answer is probably not what you think.
You might just assume it's all for international trade and stuff, right? Like a German car company buying parts from China, or a tourist swapping some cash for a vacation. And sure, that's part of it, but it's a tiny, tiny fraction of the real story.
Just look at this breakdown. A mind-blowing 90% of the daily trading in the Forex market is driven by pure speculation. That's right. Only about 10% is for what you might call real-world stuff, like commerce or finance. This means the vast majority of all that activity isn't about buying physical goods or services. Nope, it's about traders making bets. They're betting on where a currency's price is going to move in the next few minutes, the next few hours, or maybe the next few days.
This giant speculative engine is what gives the Forex market its unbelievable scale.
Now, a market that's 90% speculation might sound a little chaotic, maybe even unstable, but all of that incredible volume creates one enormous benefit that everybody in the market relies on, and that is liquidity. So what exactly is that, and why should you care?
In the simplest terms, liquidity is just how easily you can buy or sell something without your own actions messing up the price. Because there are trillions of dollars and millions of people trading at any given second, the Forex market can just absorb huge orders without even flinching. It's like trying to make a splash in the ocean versus a tiny pod.
And for any trader, this is absolutely everything. High liquidity means you can pretty much always get your trade done the instant you want, at the price you're seeing on the screen. It's the direct result of that 90% speculative engine we were just talking about.
And all of this leaves us with one last big question to chew on. The world's most critical financial market, the very bedrock of global trade, is overwhelmingly driven by short-term betting. So, what does that mean for the stability of our global economy when its very foundation is constantly shifting with the tides of speculation? Something to think about. Thanks for tuning in.